Are you worried that you're never going to be able to buy a home because you can't afford a down payment? Or maybe you feel like interest rates are so high that it's impossible for you to finally afford that first house or your dream home? Well, if this is you, you don't need to lose hope because I've got some awesome tips and tricks that can help you buy that first home or your dream home with no money down and an interest rate that is half of what everyone else is paying nowadays. There are some pitfalls with doing this, so be sure to stick around to the end of this video to minimize your chances of getting bitten during the loan process. Let's get started. There is a term to this magical process where you can get an amazingly low interest rate and possibly put no money down when you buy a house. It's called a loan assumption. So what is a loan assumption and why does it matter to me? Well, a loan assumption is basically where you take the mortgage on a property, whatever the remaining balance of the loan was, and whatever the interest rate, all the other terms of the loan now become your loan to bear. So what this means is we're recording this in 2025. So if you find someone who bought a house in 2020 or 2021 and they have a sweet 2.3% interest rate, if I assume that loan, that means that I get to get that 2.3% interest rate. So now that I know I can assume a loan, can I go out and assume anybody's loan? Is every single loan that's ever been originated, are those all assumable? The answer is, unfortunately, no. But there are two different types of loans that are assumable. Those are VA loans and FHA loans. Because I'm a veteran, I particularly like VA loans, so we're going to talk about those in this video. So one of the main types of loans that is assumable is a VA loan. A VA loan stands for a Veterans Affairs backed loan. So this is a loan that's tailored to active duty military, veterans, and sometimes reservists or their spouse, depending on their status. And there's a couple major benefits to a VA loan. The first one, and the most notable one, is that you can put zero down on using a VA loan. So that's huge. That means instead of putting 5% down on a, for example, $350,000 home, like with a conventional loan, I can now put zero down. So the difference between that 5% on a $350,000 loan is over $17,000. So that's $17,000 that I don't have to put down when I'm purchasing a new house if I'm using a VA loan. The second major benefit of a VA loan is that I don't have any PMI. PMI is private mortgage insurance. This is a way for a lender to protect themselves if you have less than 20% equity in the house. PMI can be anywhere from $50 to upwards of $300 per month. It kind of just depends on what your credit score is, how much money you put down, the amount of your loan, etc. Speaking of credit scores, the next benefit of a VA loan is that they have some flexible loan origination terms. So what this means for you, if you're a veteran who has a VA loan or is trying to get one, is that you can have a little bit higher DTI, which is a debt to income ratio, than if you're using a conventional loan, or maybe your credit score can be a little bit worse than if you're using a conventional loan. Both of those things help make it easier for a veteran or a service member to purchase a home using a VA loan. The last major benefit of a VA loan is that the interest rates tend to be just a couple of points lower than a traditional conventional loan. So now that I've blabbed on about VA loans for the past couple minutes, you're probably thinking, I'm not a veteran, so what's in it for me? Why do I even care about VA loans? This is totally pointless. Well, this actually brings me to my second point about loan assumptions, and particularly VA loan assumptions, is that anyone can do it. So one of the brilliant things about VA loans is that by definition, they're assumable. So what that means is that if I am assuming someone's loan, effectively what I'm doing is I'm taking their mortgage document and I'm scribbling out their name and I'm writing mine in. The advantage of that is I get all of the loan terms of that mortgage. So that means I have the remaining balance becomes mine, the interest rate becomes mine, their credit requirements become mine. Everything about that loan stays exactly the same, except now it's in my name instead of the last guy's. One of the things I hear a lot is that I'm not a veteran, so I can't assume a VA loan. That's totally false. Anybody can assume a VA loan. The big difference between a non-veteran assuming a loan and a veteran assuming a VA loan is what happens to the previous loan holder. So if a veteran assumes that loan, then all of the entitlement for the previous owner of the loan gets restored back to them. But if a non-veteran or someone who's not usually eligible to get a VA loan, if that person assumes the other person's loan, then that entitlement or that maximum amount of loan that a veteran can get, that stays on their credit record. So that stays on their record, which means that that limits the purchasing power that they have in the future. So now that you know about how a VA loan works, what's so awesome about assuming a loan, we're going to talk about how you as a home buyer can actually use a loan assumption to your advantage. Well, first, we're going to have to figure out, how do I even know that this house has a VA loan on it? This is where having a really good agent comes in handy, because your agent can go into the MLS and they can search for all the homes in the past however many years that closed with a new mortgage type of VA loan. So let's say you're a buyer and you find a home on the market that is $200,000, good for you, and there's a loan balance of $100,000, but it's an assumable VA loan. Nice. So let's say you and your agent talk, you find a home that has a VA loan on it, and you want to assume the loan. I actually have a client right now. He's selling his house for $320,000. He owes $220,000, so there's a $100,000 difference. So the question is, if I'm buying this house, how do I come up with that $100,000 difference? That's a lot of cash. There's two major ways that I can come up with that difference between the purchase price of $320,000 and the loan balance of $220,000. The first way I can do it is I can just plop down $100,000 in cash. Hopefully your briefcase full of $100,000 in cash is locked away somewhere, but that's one way to do it. The second way to do it is to get a second position mortgage for that $100,000 difference. This is going to be super hard to do because not a lot of lenders are willing to take that risk, right? If for whatever reason you had to foreclose on the house, that first lender, they're going to get their money back. But that second lender, they might not be able to get their money back. So your interest rate is going to be higher on that portion of the loan if you decide to do it this way, or you probably won't be able to find anybody who's willing to actually put that loan in place. So to make this a little bit more real, let's figure out the difference between a 2.5% rate, which is what my client's mortgage is at, or a 6.5% rate, which is what you could get if you were just to go get a new loan. So if I'm buying this place at $320,000 and I put a 5% down payment at a 2.5% interest rate, my payment is going to be $1,200 a month. That's pretty sweet. On the other hand, if I have that same purchase price, and that same down payment, but now I have a 6.5% mortgage, my new payment is $1,921. That's a difference of $700 a month. Can you imagine what you could do with $700 extra a month? Like, that's life-changing money right there. So clearly, there's some huge benefits to being a buyer and assuming someone else's VA loan. But what if you're the seller? Do you want to let someone assume your loan? Maybe you do, maybe you don't. So let's talk about that next. Now we're going to flip the script and we're going to be on the other side of the transaction. So this time, let's say that we're the seller and we have that beautiful 2.5% loan that someone else wants to assume. So now we have to look at a couple of different options. The first one is this person who wants to assume my loan a veteran or not a veteran? If they are a veteran, then I get all of my VA loan eligibility back, which is a different topic for another video. If they're not a veteran, they can still assume my loan, but I don't get to keep all of my entitlement. So that's going to limit my purchasing power in the future. At this point, you may be thinking, this is a terrible idea for me as a seller to let someone else assume my loan. There's no benefit for me in this. And that's where you're wrong. Because let's say I don't have any equity in the house. Let's say my house is worth $250,000, but my loan balance is $240,000. If I'm paying a realtor to sell my house, that's probably going to be a 6% commission on the purchase price, which on a $250,000 sale is going to be $15,000. So now $15,000 is more than the equity that I have in the house. So that means I'm going to pay someone else $5,000 to buy my home. That's a terrible option. Cue assuming your VA loan. In this scenario, if someone assumes my loan, I don't have to necessarily pay that realtor fee, and they can just take the home right off my plate by assuming the loan and therefore not having to come out of pocket with a lot of cash. So this is where a buyer can come to the rescue, in my case, and assume my loan. So that gives me the option to effectively walk away scot-free and not have to pay someone to buy my house. Now, obviously, there are a lot of other transaction costs associated with selling a house. It does kind of take a village, right? You've got lenders, attorneys, real estate agents, insurance companies. You got everybody and their grandmother who's trying to help you through this transaction. But the main benefit here is that I am not necessarily going to have to pay out of pocket to have someone buy my house from me. So the last topic I'm going to cover is some of the big misconceptions about VA loan assumptions and some of the pitfalls that people run into whenever they're trying to assume a loan. So I said earlier that a VA loan, by definition, is assumable. And it's the Code of Federal Regulations that actually sets that. So the federal government comes down from on high and says these loans must be assumable. But who's to say what those exact requirements are? The lender. So this can help you or it can hurt you. A couple months ago, I tried to assume one of my buddy's VA loans, and we got everything lined up, and then we received a notice from the mortgage company that said, all we need is for you to prove that you are related by blood to your friend who has this loan. So we were kind of SOL there. In that case, he wasn't able to unload his house when he moved, but he was still able to keep it as a rental, and I think he ended up not paying anything out of pocket each month. So that's pretty good. The next pitfall that you could run into is you have to meet the original intentions of that loan. For example, a VA loan is meant to help a veteran purchase a house with little to no money down. It is not meant to use as an investment property to help build your rental property empire. So if you're going to use a VA loan, you have to actually intend to live in the property. So if you're assuming someone's VA loan, or if you're assuming someone's FHA loan, you have to actually intend to live in the property when you purchase the house. The last big pitfall I see is that people think that assuming a loan is going to be a super quick process, and I can assure you it is not. The most recent loan assumption that I've done, it took 60 days for the lender to even get back to the sellers and the buyers to say, yes, we're good. We've gotten all the paperwork and everything looks good. And then they had another 2 to 3 weeks of additional processing and title work they had to do. So it took them like 75 days to sell this house. Whereas if they were selling the house traditionally, they could have just been in and out of the transaction in about 30 days. That about wraps up most of the things I know about VA loans. If you stuck with me this far, then honestly, congratulations. You're either a total real estate nerd like I am, who just loves to deep dive into taxes and loans and the legal side of real estate, or you're just really interested in how to purchase your first house with significantly less money down and a much lower interest rate. If you found this video helpful, take a look at the links below because I've got some other really exciting topics like taxes, loan rates, other topics along those lines that you might find really interesting. Also, if you're interested, I have a completely free VA loan assumption guide. You can find that in the links below. Fill out the form and I'll send that to you, again, totally free.